Welcome to FXStreet. If you like our videos, you like our content, you want to be updated to it on a regular basis, please head over to YouTube, go to our YouTube channel, and hit the subscribe button. And if you like what I'm talking about, you can follow me on my Twitter at JustAnalysis1. Taking a look at Floki Inu. Now, Floki Inu is so new that we really don't even have a full month's worth of data. October 13th was the first trade date, and since then, there was a big spike up between the 27th and the 30th, on Floki Inu, and then ever since then we've traded pretty sideways here, and it's hard to do any type of analysis on the candlestick chart on a daily chart, or even a 4-hour, or a little bit easier now on a 4-hour and 1 hour, but still it's very limited data because you're dealing with the chart with time. That's why I really like to focus on the point and figure charts, because it kind of cleans things up a little bit and provides a little bit more clear, a clear idea of what we're looking at. So from a point and figure perspective, there's a couple things to look at here and a couple trade ideas. And I'm going to pause it just to put those on the screen first, and then we're going to discuss them. On the long side of the market here for Floki Inu, you have an interesting position here. So, there's been a nice steady rise up, and then you have this you could imagine it as and it really technically is a bull flag that has formed on here, and actually coloring it green just because that's me being picky. The long entry idea here, the hypothetical entry trade, would be an entry at 0.0003 with a stop down at 0.00026 and a profit target up at 0.00039. The entry here is based on a couple things. It's kind of a simultaneous event that happens if you hit the entry at 0.0003. It breaks above a double top, which by itself isn't anything. But what it does do is it breaks above that bull flag channel. But more importantly, what it does is it confirms a bear trap. And a bear trap in point and figure occurs when you have a multiple bottom, whether it's a double, triple, quadruple, quintuple, doesn't matter. But when you have a double bottom develop, and then it moves one box lower, so it moves 1 O below. And if the next column of X's forms and develops an entry, that is what's called a bear trap. If there was one more O below, that would be called a bearish fake out. And a bear trap is a bullish sign, and using the horizontal profit target method, the profit target on that setup is all the way up at 0.00039. This trade setup is invalidated, specifically if there is a move that goes below 0.00023. If that occurs, then it can come down to 23 there, but if it moves below it one more box, then the long entry is invalidated. On the short side, this one's a little bit more tricky. So it's close to forming a double bottom at 23, and that's kind of the threshold limit that we were looking at on the long side of it. But if it moves down, and the hypothetical entry is at 22, but here's the caveat, is that the double bottom is not enough. There needs to be a triple bottom or a quadruple bottom. The minimum to have this entry valid is some type of greater than double bottom. So there could be a triple, split triple, quadruple. Doesn't really matter as long as it's not just a double bottom. You need to have three or more on here to get that valid short entry at 22. If that occurs, that'll be a very substantial break that will kind of terminate a lot of the final support structure that exists around this value area. And you can see a pretty steep move south to 0.0014. So again, the entry on that, only if there's at least a triple bottom, is at 22. The stop is up at 25, and the profit target down below, utilizing the vertical profit target method, is down at 0.001414. Thank you for watching. Please don't forget to like, comment, and subscribe.